We heard a lot now from investors, what they think, what they seek, what they like, but what founders are thinking of investors. So next we can welcome here two brilliant founder and CEO who raised venture capital, moreover from international investors. Is that easier, less painful, much quicker than doing a deal local? We will ask them. And let's hear their stories. First, David Salamon from CloudStorm, then Mark Félegyházi from Avatao, and happy to invite again to the stage Antal Károly, president of the Humban. So here you have.
I actually happen to know both guys from this time when we started the Hungarian Business Angel Network, and it worked the way that Lena and myself were sitting in a car, and we jammed some startuppers on the back seat, and then we were traveling with them across Central Eastern Europe. And that was 2 years ago. And at the time, David was like this talented guy with a good product and no traction at all. I met him again a year ago, and he was a very talented guy with a good product with no traction at all. And now we are here, and apparently he has an investment. So I'm interested what broke the pattern. So just take it away.
Hello, everyone. My name is David. I'm the CEO and co-founder of CloudStorm, but here with me, also Bence and Mihai are my co-founders there. Unfortunately, there's a shortage of seats here, so they can't join on the stage. But as always, this is a team effort, and this is not a team effort only with co-founders, but also with investors and co-investors in our case. We are glad to have in the room our two investors, Hubraum with Konrad here, and they are from Poland and Germany, and Portfolion from Hungary with Shara and András. I don't know if they are here. Hello. And this is basically what we do. So we do robotic process automation. So we give everyone's work a meaning. So everyone should do a meaningful work. This is our vision. And anything that's routine, repetitive, or boring in the workplace, we automate it. So we create software robots that connect business applications and also to automate the repetitive tasks of administration people in a large company. So basically, we are solving the mess in the back office with the use of software robots. So where do we come from? We understood that there is a really slow software development in a large company. The bigger the company it is, the more software they have. But obviously, the least integrated those software are, the bigger the company. So there are a lot of missing integrations, and people have to do manual work, copy and paste data between Excel and SAP, do reports manually, create invoices by the hundreds in a large company. And when there is a large company, there are hundreds of people doing administrative work, and we could help their work really much with the use of robots. So our solution is robotic process automation. We combine process mining with robotic process automation. This is our key differentiator. And our robots operate the existing applications of the employees in a large company like a normal user would. So we are replicating how a user is using SAP, Excel, Word, and other things. We take the existing applications, and our robots click on behalf of the users. So you can imagine like there is a process in a large company where every week there's an Excel being sent over email with new product prices. And what happens is that our robot is opening the email, reading the Excel, and goes line by line and enter the data into SAP without human intervention. So this is like macros, but on a large scale. We can connect all the business applications, anything that's accessible in the browser, anything that doesn't have perhaps an API. So these things are not new, but these are new in the enterprise. So we are bringing a really scalable integration approach of online workflow tools into the enterprise, connecting all the different applications. So a bit about the founders. I'm coming from a startup background, and my two co-founders and friends are coming from enterprise background. And we started this a couple of years ago. We started as a development agency for softwares, but later we've seen that the bigger the company it is, the more need for automation, the more need for integration. And then we changed from a software services to a product company. And as I said, we just closed our first investment round. You can call it seed or pre-seed, depends on where you look at it from. So 2 investors. We are really happy to be the first of Deutsche Telekom Hubraum's investments in Hungary. And that these investments also help us realize a large grant by the European Union.
Yeah, thank you, and congratulations. Although I think it's a very Hungarian thing to be very happy when you raise funds, but to be honest, that's the start of the whole thing. I understand you had a really long journey to this investment. So,
yeah.
How was you? I know that you went to startup competitions. What was your experience there?
Yeah, so we entered a couple of startup competitions in the beginning just to see if our idea is a good idea, if there is a need for this, or validated by people who have no idea about our markets. So soon we gave up on the startup competition idea, but in the beginning we won, for instance, Startup Wise Guys. It's a really good Estonian, Latvian B2B startup accelerator. They had a pitch competition in Hungary. I totally recommend any founder to go there. I've been there once. It's great. We won it, and we were given an offer of a couple of dozen of thousands of euros to be part of their accelerator, and we said no, because we wanted to keep capital at us for a while. So we didn't want to dilute all the way in the beginning, because we had a bit of profit that we could reinvest in this startup.
I thought they have a good reputation and an interesting portfolio. So didn't you think that their added value would make up for that dilution? Or you said, no, they are not good enough in your space?
In case they would give 10 times as much as they do, we would have said probably yes. But with such a valuation, like if we accepted that, it was a year ago or so, or 1.5 years ago, were we to accept it, our valuation would be 10 times less as it is now. So it's always a matter of time. So if you have the funds to sustain yourself until you raise your next round, it's sometimes wise to just wait for a good opportunity. And we waited a lot.
So you basically you're saying that the startup competition is a good format to try yourself out, practice your pitch, but that's not the main channel where you think it makes sense to raise funds.
Yeah, I think so. Unless it's a no equity accelerator, in which case I totally recommend anyone to go to a notable one.
Okay, so can you talk me? So that wasn't the case. So what was the next step? I understand you worked with. So there were some wannabe helpers around the road. Along the road. So how was the journey to find the first prospects? So if you can talk us through that process.
We were really lucky to have been in the software business for a while, so we had a bit of funds and a bit of runway in the beginning, so that we didn't say yes to all the offers that we got in the beginning. And I recommend that as well, because in the first couple of offers we received had some clauses that may not be best for everyone. So for instance, we've had a meeting where I'm really happy that this came up early in the meeting, that perhaps that investor would like to change the management as soon as the investment is realized. And that was something that we wouldn't necessarily like to do, so we said thank you, and we moved on.
So how did the sort of the shortlist come about? So what was your way to? This is a kind of a sales process, but you're selling yourself, right?
Yeah.
So how did you pick the right ones? What was your strategy? How you chose those ones?
Yeah, so we are in the B2B enterprise software business, so we thought like, okay, our sales processes are really long, and we can expect something like that. So we say like 9-12 months for a sales process. That's quite a long sales process, but you have to, live with that. And we thought like maybe in that time frame we could raise this money. And at the end, it turned out to be 1.5 years from start to finish. So when we first got in touch with Hubraum, the German-Polish investor who is on board now, within a couple of months, we had a term sheet. So that was really quick. And we thought like, oh, that's great. They only want to have a co-investor in case we could raise it, we could have a better valuation. So we said like, yeah, okay, so we started to find a co-investor for some deal that was already set. And that took a long time. We talked with angel investors, we talked with institutional investors, and finally we settled with Portfolion, where that was the best match between the two of us, I think.
Talking about matches, obviously you mentioned valuation. Obviously, it's a very important part of the deal. How about added value? So, do you see that these guys are the ones that they can help you, especially in those areas where you might need help, or is it more like, okay, these guys are financial investors? So how is it in your head?
During the whole process, we were really lucky because I've been in the startup business for 3-4 years before this. And back then, it wasn't that obvious that if you talk to an investor in Hungary, that you won't walk out of the door with the majority of the company given to the investor, for instance. So right now, everyone was really straightforward in the process, like what can we expect from them and what can't we expect from them. So we were talking with institutional investors who said like, okay, we are just financial investors. As long as you bring your numbers, we are fine, here's the money. And we said like, okay, thank you, that's a good deal, not for us. So we looked for investors where we had a hope that there would be more than money. And even though the investors say like, it's about the money, and if you get something else, that's extra, so you don't expect it. But so far, we've been really, really satisfied with the cooperation. So
do you have airtime? So if you have an issue, do they have time for you?
Yes, and also being in a corporate world, it makes a lot of sense to go with corporate investors, which add to your reputation and reference them. And they can, in a special situation, maybe they can open doors for you. They have clients themselves, and we get introduced, so that's great.
And how was the negotiation process? I always tend to think that it's such an asymmetric situation. I mean, you are in that situation not too often in your time, and they do that like every day kind of thing. So how did that feel, the actual process of the hardcore negotiation?
I agree that this is not a level field because this is the usual business practice for an investor, and for a first-time or second-time founder, maybe this is new. So it was great for us to have, this is the advertisement part. We were working with Leonard. But you could work with any distinguished consultant or coach who could help you with that. So if not on a professional basis, but then talk to someone who from your friends or family has had experience with investments, or look for your network in LinkedIn or somewhere else. Go to meetups, talk with people, and find someone who could coach you in this. Because these terms, put option, tag along, drag along, vesting, reverse vesting, you can go through this all day just having different abbreviations and technicalities. It's not straightforward. It's not something that you will be able to comprehend even. Like what is the consequence if you decide to go with this term or that term? So you need professional help in the beginning, I guess.
There is one element that we don't often talk about outside of the hardcore facts is the sort of the soft side. The whole process is an extremely long process, and I think we're going to talk about that once you're on stage a little bit more. But this has been a long journey. So how did you survive? I mean,
we survived just.
Right.
That's about it. So you should always keep an eye on your runway. So how much cash reserve you have and how much assets you own that you can sell in order to get a bit of cash to just extend your runway a couple of months. Because You can jump into a deal very fast, but that may not be the deal which is good on the long term. So it pays off to preserve cash, not take out maybe that much of a salary, or maybe not. No, so to preserve cash and have a runway enough for an investment. We could have gone earlier with angels, and we had good experience with business angels. But if you are going for a fast deal, talk to angels. Choose the type of investor that suits you. So if you have the runway, and if you are going for a corporate clientele, go for a corporate investor, but then expect that the decision making would be also longer. So it's always a combination of how much time you have, how much runway you have, what are your market projections, and what offers you get from different type of investors.
Right. So the next guy, Felix Hazimark, he's another guy from the backseat of Leonard's car, and he's, to me, the typical experience of what an investor feels as he's a typical FOMO experience, which is, when I first met him, it was clear that he and his team is killing it. Is very good at what they do, very good techie guys. In terms of the business model, he was like, meh. I didn't see the big thing in there. Fast forward 6 months, and they were signing contracts with big, like tier 1 investment bank kind of thing. And the train is just, I didn't see even the train to jump on. So I think that was an interesting lesson for me, that you can fuck around, but the train can leave very, very quickly once they found their business model. So Felix Hazimark, and I'm curious about your presentation. So take it away.
Thank you very much. So my name is Mark. I'm the CEO and co-founder of Avatao, a small startup company. What we do is that we teach software developers to build secure and reliable software. And you all know that software is the world today, and there are so many breaches, there are so many attacks that cause a lot of damage to companies, and it's increasing. This is a figure from Accenture. It's increasing year by year. This is a yearly average damage to a US company from this 250 sample. And the problem usually comes from vulnerable applications. And the applications are, this is, again, a report from Veracode, one of the major security companies. And they show that the majority of applications before release are containing one of the major OWASP top 10 mistakes. Now, unfortunately, behind all these mistakes are humans. Software developers, people, administrators who are writing that software, who are operating the systems. So since code is not writing itself yet, we have to concentrate on these people to give us the reliable software, the environment where we can live, where we can work. And this is what we do. This is what Avatao does. What we are doing is to try to elevate these people, to give them a generic understanding of reliable quality coding and quality secure coding. And what we do, we have an online platform where developers can log in, and to basically taking them along a series of exercises, we teach them security hygiene, how to code properly. We don't make them excellent super hackers. That's not the goal. We just want to raise their level of awareness so that when they write your next software, the software should be good. And this is actually your business purpose. So whoever operates a business faces software today. So this is a key thing for many of the companies. And we started back in 2016, I would say. We did a pet project even before, but that was just a side project while teaching at the Technical University here at Budapest. As the figure shows, basically with empty pockets. So as David said, you have to have endurance. You have to have stamina to actually start. At the very beginning, the first MVP product has to be built out of nothing. We had a great team, of course. Otherwise, it wouldn't help. But we had a very little understanding of business. So we started to plan. We were coming out of university, so very systematic. We had 16 different business models at the beginning. the business modeling canvas helped us to make them. And this is what came out after that. So this is a full system of our business model. Can you see it? Oh, you can't see it that well, but basically these are separate business models connected by effects and how money comes out. At the bottom is money. So as you can see, many arrows go to money, which is good. That means that all of our business models are going to generate money. Eventually it happens. What is lacking in this figure, and then unfortunately because of the light you can't see it, there's no sales. This shows where we come from. So this changed since, fortunately. So we went out and we started to talk to customers. This is the most important. Talk to customers. What do they say? What do they want? We started as a hacking platform. It turned out that customers tell us that you guys are great, but we don't need more hackers. We have enough. Right? We have 5 excellent people on our team, but we have 500 developers. Teach them. So we became a developer security platform. It hurt, actually. So we went for funding. At this point, we wanted to have a decent business. We went for an angel funding, and we found excellent angels. It's actually one angel who's a private investor, so he has money. It's Fast Ventures, I can name them. And the other one is Microsec, is a company who was a client, and they liked the product, so they put in money. Which is a very good indication that the product is actually valuable to some. We just had to make sure it's valuable to many. So we got the money in summer 2017. A good feeling, finally we have money, not just the product. And it's like, oh, from now on everything's going to be so easy, right? So that was the reality. Suddenly I had to deal with hiring new people, dealing with customers, building out processes, everything at the same time. And I'm always smiling like the guy here, but unfortunately it wasn't always. Sometimes it was grinding and not smiling. A lot of fun though. I always say raising a startup is like raising kids. I have 2 kids, so it's exactly as it is as my 3rd kid, actually. And even on vacation, we had to keep focus. So this is our CEO doing a vacation, and I really love this figure because this is exactly how we feel after the investment. So we are kind of sitting on a wave, and the wave is starting to come up behind us. And if you don't focus, if you don't make the most out of it, you will fall. Because the wave can help you up, but the wave can also flip you. So it's a picture that completely shows our situation after the angel investment. What is also more important is, as I said, one of the major tasks of management is to build a team. And we had a great time, and really fortunate of having a great team, having an A team. It took us a while, so people came and go. It was really hard process, and David also can confirm that finding people for startups is really difficult because there are major big companies in Hungary who give them literally. Yesterday, one of our developers came and he got a salary offer of 4 times what we give them, 4 times. And it's like, he's not going to go. But you really have to have a good culture in order to keep these people. And there are not too many. So we are 11 at this moment. Having said that, because we are closing a new round in a couple of days, we're going to expand business. So we have excellent developers, a little bit less on the business side. We have many customer prospects, and we want to deal with them. So sales, customer, and business development is really the key thing we want to develop from the new money we get very soon. So essentially, there is a simple product, right? And this is what we want to have. Our product is not as simple as it could be, but I must admit that we are getting close to that, and companies are understanding it really well by now. It has a very clear pricing. It's showing here. We are approaching this clear pricing with our product. Of course, here the most difficulty is always that customers are requesting always something else. It's like, hey, I understand this, but can you do it in red? Or can you do it like jumping on your left foot? So these kind of things, and you have to resist. You have to keep focus. Happy customers. We have happy customers, a number of them, and of course traction. Right? This is the most important on this picture. Those on the back you can't see from this table, but here is money, right? These kids collected money, very important. Otherwise, the lemonade business wouldn't fly here. So traction is king. And traction is king, investors can tell you. No matter what you're selling, no matter how you look, I could have a piercing here with the red hair. If I say my revenue is $10 million a year, they would buy my business. All right, so that was the seed round, and it was really a lot of fun. But from the very beginning, we went international. The business we are doing, it's an online training business typically for larger enterprises, B2B, or mid-sized companies. In Hungary, we depleted the potential number of companies very, very soon. So from the very beginning, we had connections mostly to Western Europe and the Anglo-Saxon countries, the US, UK, and we started to build a foothold mostly in the UK, and now we have plenty of interest from the US. And we needed a new round to actually live up to the challenge, because we had customers, and suddenly we are in a kind of a bad and good situation that we have more interest than we can serve. So we're going after the interest. And so we got in touch with a number of investors, and Leonard was our help, and the Absolvo team was our help. So we established this connection. Some of those we met ourselves. Some of them were contacted by Leonard, and we worked together hard to talk to these investors, VC funds, private investors, angels, and so on. And it was a lot of fun. It was a long process because investors are different. It's like, that's why I say it's investor speed dating. It's really like dating, getting to know each other and trying to select the partner whom you envision to work together in the next years, or in some cases decades. We have our angel investor said basically their investment horizon is infinite. He's like Warren Buffett. It's like he exited from companies after 18 years. And the risk attitude is a really, really important thing. And we met some of the investors, unfortunately, and some of the investors, fortunately, who are on either side of this attitude. Some say, I see your company, it's not perfect, and it's half empty. Like, what is lacking? You don't have this and this and this. And I understand them. They are trying to avoid major risks in a company. But other investors said, look at the company. So what can you do with this company? How big can you grow? And I see that your traction is not there yet. I see your customers. I see your potential customers, and so on. So we saw this attitude difference. And I would be wrong to say that some was Hungarian, the other was international, because we saw in Hungarian and international both attitudes. It's really important that investors are risk takers, and as it was mentioned before, the earlier you go, the more the risk they take. So they have to be careful, and sometimes they want to see more revenue, sometimes they want to see more management. It depends on the investor attitude. What is really important is that, at least in our case, we were international from the very beginning, and investors, especially international investors, want to see international traction. So I could have all the Hungarian companies signed up for my business. It wouldn't matter if I have 0 US customer or UK customer. That means that I'm not in that market yet. And that's a hard part, because having significant customers abroad, you have to be there either physically or travel regularly or be there at the events and so on. Having support from current investors is a key thing. If you want to pull in new investors, and if your current investors are not supportive or like 80% supportive, that's not enough. In our case, they were very supportive, but at a certain point, that was an interesting story. Our current investor said, like, we would put in money, but if there is a need, we could put in less. And someone took it bad. Just like, oh, they are not interested. Maybe you shouldn't invest in this company. And what our current investors meant is that if you need more space in the investment round, we would leave you space. We would give up some investment money. They didn't mean that they wouldn't follow up. They actually did follow up with a good amount. And this was misunderstood, and it almost caused a big damage. The investment was almost dropped because of that. So we had to explain that this is not what they meant. They would put in more money, even more than that. And in the case of investors, what is really important is speed. Like, how fast can you catch up with a startup? How fast can you understand the startup? And that's our perspective, of course. And it's the same for startups. Like, how fast in this dating process can you understand your investor? What are the purposes? What are the risk-taking attitude, and so on? What are the investment goals? Exit constraints, these kind of things. So Although investment at this stage, I would have expected that seed investment is a little bit faster and maybe Series A would be longer. This is like enterprise sales. So for those startups who are doing B2B enterprise sales, investment is not that unfamiliar. So it's exactly like selling to an enterprise company. Same length, actually. For those of you who do B2C startups, this might be a new experience. So you have to practice. What is important for us, and because our business was inherently international, we're looking for international investors. And don't take it wrong, I really love Hungarian investors. But in our case, for example, we saw a lot of interest from the US, and we specifically looked for investors who have some connection to the US. And we're lucky to have a co-investment structure where we have investors now from Europe and also a co-investor from the US. And I can't tell you names, but hopefully in a couple of days that will be more open. And this was really important because, as some of you mentioned before, the money is the least what an investor can put in. It's the connections, it's the help, the business development, know-how. And in our case, I'm really confident that the time we start to work together is going to be really fruitful. At least in this dating process, it was really a positive vibe and understanding between us. Tony and Lena said, like, I should say a couple of words about the conditions for startups for those of you who want to go. So first is market. I didn't mention product on purpose because product will come. As the more you talk to customers, the product's going to be okay. They'll be right. It has to be the right market. It has to be big enough. It has to be interesting enough for both for you and for the investors. The team has to be right. Everything is on the team. And I'm sorry to say traction. I expected like, oh, I have a great idea. Investors will give me money. This is not the case. You have to show traction. You have to show track. It's like location, location, locations. Traction, traction, traction. It has to be there. And so the next is going to be, we plan to go forward somewhere in next year if the traction justifies it. So we are working hard to bring that traction. And since the business is heading towards the UK, US angle, we hope to get as much traction as possible from these Anglo-Saxon countries.
10 out of 10 startups from the region have the same problem, that they don't realize that they need sales. How did you solve that problem? So maybe any suggestion from 5 techie guys, what happened? Did you become the salesperson, or so how did you approach that?
Yeah, so this is a critical problem. I think it's a typical Central Eastern European disease that we have, I would say, a great product, and basically it sells itself. I think people have seen this and said this so many times. In our case, we were fairly known in this community before because of our work in hacking and security analysis. So we started with our own network, and that went pretty well. I would say that gave us the leads for the next year or so, and we are slowly expanding in that case. And we didn't have the money, to be very honest, to hire full-time salespeople. So I became a salesperson. After a while, our CTO became a salesperson, and each of our developers became salespeople. And we have this joke within Avatao that even those people who left the company because they were looking for other careers, they never quit Avatao. They just become salespeople, right? And funny to say, but they actually brought customers. So having said that, this funding round is exactly for that purpose, to have a systematic business development and hire now really salespeople who call themselves salespeople. And I'm not complaining because we have enough leads at the moment. It's more lead development that's the biggest challenge for the company.
Thank you very much. David and Mark.
Thanks a lot.
Fantastic.